Redlick. I am at the Kingsville Supercharger in Texas, Kingsville, Texas, on my way from Starbase back home to Florida. You can see my red Model X Plaid here charging. It's going to be a while, so I figured I'd take a minute to talk about what I've been hearing, what I've been seeing in response to Tesla's Q1 earnings call. There was really no surprises in the earnings call except for one good thing. A lot of the talk has been, oh, margins are down, oh no, this is a problem, and this ignores the growth. Tesla's growing. They're not growing as fast as I might like in the short term, but in the long term, they are positioned for really, really phenomenal growth. What we are seeing is just really good examples. BMW sales in Q1 of 2023 were down 13% compared to Q4 of 2022. Mercedes sales were down 7% in Q1 compared to Q4. Tesla sales were up 4%. So Tesla continues to grow. Don't forget that Q1 is 2 days shorter. Shanghai had a couple of shutdowns. There's like a national holiday. There was some changeover of a line. Berlin and Texas continue to grow rapidly. They're making a lot of progress. That's actually in the long run going to help margins, but I just want to distinguish between margins and growth. If you are a short-term investor and you don't really care about the long term, then maybe you care about short-term profits. And yes, net profits were down in Q1 versus Q4. They weren't bad. Tesla's still making a profit. That's better than a lot of companies. And they're growing, which is better than nearly every car company. So and we're in a very challenging economic time where we're probably in a recession. You know, we can play games with what's a recession, but we're certainly, the auto industry is in a recession. Interest rates are up, which makes it harder for people to buy cars. So it's a challenging environment, and Tesla's still doing well. And what we're looking for is, at some point, we hope, there's no guarantee of this, but at some point we hope the economy gets better. Interest rates go down, and it becomes easier for people to afford cars. And when that happens, what else did we see in the earnings report? Capex, $2 billion. Tesla is investing for growth. They are growing Berlin. They are growing Texas. They're preparing to build a new vehicle factory in Mexico. They are ramping the mega factory in California. They announced a mega factory in Shanghai. They said in the earnings report there will be many mega factories, not 3, not 4 or 5. They said many mega factories. This is probably the biggest number that I saw in the report, was that storage deployed grew 56%, 57%, nearly 60% growth in Megapack, quarter on quarter, that much growth. And by the way, the revenue numbers, as best I can tell, the revenue numbers do not reflect those sales. I think the revenue for Megapack may be delayed. That may not be booked as accounting revenue when their storage is deployed. There may be some schedule in which they get paid, because revenue for energy was up about 15%, I think 10 to 15%, but storage deployed was up like 60%. So what does that tell you for Q2 and Q3? That revenue is eventually going to get booked. And it's $500 a kilowatt hour times nearly 4 gigawatt hours. You can do the math. $500 per kilowatt hour, $500,000 a megawatt hour, $500 million a gigawatt hour times 4 gigawatt hours. That's another $2 billion in revenue that will be added. And I think there were only 1.5 or $1.7 billion in revenue booked. So there's a lot of revenue in there that wasn't counted yet. And that's going to boost things. Now, there's another whine that I hear from, I'm going to say it is Barry Glack, but not just Gary. It's Gary and quite a few others are whining about Tesla's margin. They're saying, well, their margins without regulatory credits were only 19%. Why do regulatory credits not count? I could understand if you were saying, well, they're earning these regulatory credits and it's shrinking over time and it's going to go to zero. But I think this was a record quarter for regulatory credits. That's growth. I mean, I don't understand why Tesla gets so much in regulatory credits, but it's not a bad thing for Tesla to get, I don't know, something like $700 million that came from other car companies. They're getting revenue from their competitors. This is not a bad thing. So that's growth. I don't know what the long-term prospects are for Tesla's regulatory credit revenue. Is it going to go down in the future? Maybe. I don't know. I can't answer that question. All I can say is that Tesla has growing. They're growing, and the most important thing is there's growth in the short term. Here's how much growth we saw. More important is there's growth in the long term. They're investing in factories so they can produce more vehicles. They're investing in FSD so that they can generate more revenue from the vehicles that are out there now and from their future vehicles. They're investing in the next generation vehicle so that they can sell more vehicles to people who can't afford the current round of vehicles, because these next generation vehicles are going to be even lower cost. I'll go with Gary Black for this one. We'll go with Barry Black. Barry Black keeps referring to Tesla needs to come out with a $25,000 to $30,000 compact. The Model 3 is priced at $33,000 in China. $30,000 would not be a significant reduction in price. And that's at like 20% margin. Yes, that's correct, Valentino. The 19% margin is after regulatory credits. You'll hear people saying gross margin X regulatory credits. That's one of the things I've been hearing people saying. They don't want to count the regulatory credits. Why? They keep earning them. They've had regulatory credits every quarter as far as I know. So Tesla's growing. Now, I was in a space earlier today and my mic wasn't good, or my connection wasn't good, so they couldn't really hear me. And that's what motivated this video, by the way, is I figured I could make the video while I'm at a supercharger, while I have a good signal. Because on the road, I don't always have a good signal. And there was this conversation about Tesla's future is dependent on FSD, that Tesla's market cap depends on them delivering FSD. No, the market cap is not pricing in FSD. The market cap is based on the fact that Tesla is growing 40-50% a year, and long-term expected to grow 50% a year, and they're profitable. Well, if you have a company that's growing 50% a year and it's profitable, well, long-term, that's a company that's going to make a lot more money. And that's a company I want to invest in. And you have a company that's trending towards a much higher revenue than its competition. You're going to see that Toyota and Volkswagen get wiped out. Tesla's going to surpass them, and you're going to see much higher revenue long term for Tesla than these other companies. Higher revenue at higher margins. I don't see how this is confusing to people. So what company do you want to own? And the thing is, I think we're in an economic crisis. We're in sort of like the world is just an endless series of crises, it seems. Where do you want your money in a crisis? Do you want your money in a company that's shrinking and not making money, or in a company that's growing and making money? I want my money in a company that's growing and making money. Where does this lead to in the future? If Tesla continues to grow and reduce prices if they have to deliver as many cars as they can, then they're going to expand their market share. And this is what successful companies do in hard economic times. They choose to grow in hard economic times rather than shrink in hard economic times. They invest in the future expecting that there will be a positive future coming, and they want to be ready for that future. And that's what Tesla is doing. Tesla is positioning themselves to be ready for when the economy booms. Other companies are hunkering down. They're not making as many cars. They're not preparing. Tesla's building the infrastructure for growth. They're building the lithium refinery. They're building the cathode, I think it's a cathode refinery or cathode factory. They are preparing for growth. They're getting the next generation vehicle ready. Cybertruck, there's a big piece of news for us Cybertruck fans. Cybertruck is going to be delivered in Q3. Now that's Elon time, so let's call it Q4. But we're going to see Cybertruck delivery. I might get my Cybertruck by the end of the year. I'm excited about that. So just a lot of positive news. I'm very, very positive and excited about Tesla's future. My family wants me to diversify into other companies like Lululemon. I'm not saying Lululemon is a bad investment. I don't know enough about that business. I know Tesla. I own a Tesla. I've researched Tesla extensively. I would say this, Tesla is a conviction investment. If you have the conviction and you see the growth and you pay attention to the facts and you see that this company is going to grow, then I don't see how you invest anywhere else, frankly. I don't see any. Now, maybe there's some other company out there like Lululemon that people have conviction, they see the growth, they see the profits. I don't know enough about that business to comment. I know when I look at the auto industry, when I look at the energy industry, when I look at AI, let's see. Faisal says, how low do you think Elon will push down the auto gross margin to deliver 1.8 million cars? 0%. I think they will push margins below 0% if they have to deliver 1 million or 2 million cars. If they can get to 2 million cars, they will push. If they have to push margin to 0, they will. And this is based on a bet. Now, I think it was Stock Talk was saying that Tesla's market cap depends on FSD. Now, let's be clear. FSD is a bet. It is a bet that Tesla is going to deliver FSD. And if they deliver FSD, then this market cap's a joke. If they deliver FSD and the car is able to drive without a human supervising, and it's able to go pick up people and take them for rides and to make them into robotaxis, and each car is going to make, I don't know, $50,000 a year in gross profit for 10 years, $500,000 on a car that costs $50,000, or $25,000 or $20,000, and you're going to generate $500,000 in revenue on that car, or $500,000 in gross profit on that car. Well, you're going to sell that car for $100,000 now instead of $20,000. So you like 5x the revenue. The margin is later, and this is the idea of delivering these cars at low margin. Just see. What do you think about Elon saying FSD by the end of the year? Elon says that stuff. I'm not really worried about whether FSD. This is an important point. It doesn't matter for this scenario. If FSD is delivered at the end of this year, if FSD is delivered at the end of next year, if FSD is delivered at the end of 2026, or 2025 or 2026, the longer it takes, the bigger the nut when Tesla delivers FSD. If you crank out more vehicles, the more vehicles you crank out. Let's say you decided we're going to hold on to 20% margins and we'll only deliver 1.5 million cars this year. But if we go to 0% margins, we deliver 2 million. So that's 500,000 extra cars on the road. And then next year, it's an extra million cars. And then a year after that, it's 1.5 million cars. So you got an extra 3 million cars on the road, let's say, because you decided to push volume out. And now when you flick the switch, and those 3 million extra cars add FSD at $50,000 a car, that's $150 billion in revenue. It's all profit. So the value of pumping those cars out now far outstrips the cost of having to reduce margins a little bit. I want to touch on advertising a little bit because that came up in a Twitter space. I put Gary Black on the spot. I put Emmett Peppers on the spot. I put a couple other people on the spot. All right, what's the ad going to say? What's the ad going to say? Is the ad going to say, Tesla cars are fast? Is the ad going to say Tesla cars are cool? Is the ad going to say Tesla cars have range? What is when I ask people this, I get a lot of different answers. Well, if you're only going to spend $50 million on an experiment, according to Barry Black, you got to pick one. So what did Gary pick? He says, we got to advertise total cost of ownership, that Tesla cars are less expensive than people realize, blah, 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 blah. No car company that I watch tons of sports in my life. I never saw a car company advertise a car saying, our car has a low cost of ownership. That's not what they advertise. They advertise our car is cool. Our car is fun. Our car will get you girls. By the way, sorry, so far it's not getting me girls. I don't know what you're advertising, but that's not what you're advertising. And then I said, well, so, and Gary went back and he says, well, we let the ad agency decide that. Well, how do you pick the ad agency? How do you know the ad agency's making the right decision? Well, that's what they do. Which one? It's a black box. The advertising answer is a black box. Well, we're just going to, and it's like we're going to spend $50 million and it's going to generate an extra $2 billion in revenue. Really? You think that's how it works? So, yeah, I mean, look, I'm not saying that advertising is something you never do. And Master Photons is maybe just a PR person, not an ad. We have the best PR person in the world. We have Elon Musk, who has a huge following. There's about 10 Teslas behind Warren making more money for Tesla. Don't sleep on the supercharger network. My best estimate is in long run, the supercharger network's about $1 billion a year in revenue. Let's not long run, let's say 2024, supercharger network's another $1 billion in revenue. It's not a significant factor. It doesn't hurt. It's a nice little extra bonus to have. And the real value of the supercharger network is to make the cars more attractive. Hey, Johnny Football. So I just want to get back to this point. If you are looking at Tesla as an investor and you're asking yourself, what's more important to me? Is it a margin of 22% versus 19% important? Or is a growth of 40% versus 30% important? You got to pick one, because if you're going to, and the fantasy that, we're going to sell the same number of cars, we're just going to make an extra $5,000 a car because we spent $50 million. It doesn't work like that. $5,000 a car times 2 million cars is like $10 billion in extra revenue because you spent $50 million. If you believe that, I don't know. I guess the tooth fairy delivers, quarters to you every night when you leave a tooth under your pillow. I don't know. That's not how it works. Your return on ad spend might be 3x or 4x your ad spend if all goes well. And a lot of times you do ad spend and it doesn't work out. Well, they should test an advertising campaign. No. Advertising shows you're desperate. Tesla's not desperate. People want the cars. They can't afford it. Obot, nobody else has complained about the signal, so it might be you. I don't know. I'm not getting any hint from my app that my signal's bad. But, I pretty much made my point. Yeah, Johnny Football says more excited about energy than anything. Like I said earlier in this video, storage deployed was up like 60%, nearly 60% quarter on quarter. That is phenomenal growth. And the revenue from storage deployed did not show up. From that growth in storage deployed did not show up in the Q1 numbers. That's likely to show up in the Q2 and Q3 numbers. That growth is going to continue. Revenue's going to go up significantly on the energy side. Okay, so it looks like multiple people are saying I'm breaking up. So with that said, I think I've covered my points. So I'm going to let this go. Thanks everybody for telling me the signal's bad. I might as well wrap it up. Thank you all for watching. I'm going to head out. Oh, signal's better now. Okay, well, let me just see if anybody in the chat has questions or comments. Simple point, margins versus growth. I'm choosing growth over margins. Tesla's choosing growth over margins. Good now, signal good now, don't move. Tesla's choosing growth over margins. They've been very clear about this. They said it before. They will take margins to zero if they have to get the growth because they believe this is going to happen. They believe FSD is going to happen. What if half the car buyers have no clue about current Tesla pricing? You don't think it's worth letting them know? Well, first of all, half the car buyers, Tesla's going to sell 2 million cars. Tesla's going to sell 2 million cars worldwide when the world is going to sell, let's say, 60 million cars. Oops. All right, we're done.